All right, guys, we're on. Welcome back to The Build. Today, I'm talking all about the 5 numbers that dictate if you actually make any real money. Because most owners in this industry do not know their numbers. They don't know the numbers that count. And you are not in the business of whatever skilled trade you do. Whether you're in the plumbing game, electrical game, building, carpentry, whatever, you name it, that is not the business you are in. That is just a service that the business does and offers to clients. A real business is driven by numbers. And most importantly, there's 5 that actually matter. There are a lot of numbers that you could look at, but there's 5 that when you condense it down, these are the ones that actually drive the business growing and scaling, which ultimately drives the revenue up and ultimately drives the bottom line up, which is what we're in business for, to make profit. Now, the better the numbers, the better the business. So if you do not get these numbers right and you don't track them, you don't manage them, you don't improve them, you are not a real business owner. You are not a real operator. And you will just be busy but broke. You'll scale chaos. You'll run out of cash. You'll burn out. The business will end up owning you. So this is the consequence of not getting the numbers right. And these 5 numbers are the ones that you need to track. So number 1, the leading driving number of a business is the weekly sales target. Forget the yearly revenue that you want to do. It's only going to happen when you look at the sales engine of a weekly sales target. And you need to know your close rate. You need to know, right, how much work are we actually winning every single week? Because this is the maths that happens. For a £3 million a year company, if you're looking at 48 weeks in a year, you need to be winning 62.5 grand a week to win. These are the hard numbers. You need to be winning 62.5 grand a week. If you want a £5 million a year company, over 48 weeks in the year, you need to be winning 104 grand a week to win. 10 million over the 48 weeks is 208 grand a week to win. This is your number. This is your leading number. You can't have profit without sales. Sales is the driving force of a business. And a lot of you refuse to own the fact that if you own a company and if you want to drive it forward, you have to be a salesman. And how does a salesman succeed? He has to know what he's hitting and what his target is first. This is where we've got to be. And you need to know, right, well, if I want to win, let's say it's a £5 million a year company and I want to win 104 grand a week, what's my conversion rate? How much do I need to be pricing in order to actually win that? And an industry standard, and I don't like industry standards because I like to exceed industry standards, but industry standard, you should be closing at least 1 in 3. So if you want to be winning around 100 grand a week, you need to be pricing at least 300 grand a week. Your conversion rate should be better than that. The better that you do it and you build your sales system and your sales pipeline and you actually filter the leads that you have in a business. And I'll be going into all of those things in future episodes. But for the fact of this part of the show and the episode and knowledge that I'm sharing with you guys is, what's your figure? With the revenue you want to do for a year, how much is that a week that you need to win? Because business is won in the weeks. It's not won by, let's file the accounts at the end of the year and let's see what we did. And a lot of people do this. You just get to the end of the year and go, Mr. Accountant, what did we actually do last year? And that's useless. An accountant only reports on what's happened. They just file on what has happened. An accountant doesn't direct the business and the yearly growth. That happens in the weeks of the full year. And it's not about the maybes. It's not about the could be's. It's not what's in our pipeline. It's what is fucking won. What have you actually sold and got a contract and got a handshake and a signature and a yes? Like signed, sealed, done. Done, done, done. Not, yeah, I think they're going to go for it. It's cash in the bank as the equivalent. Like firm action that, yes, you've won this project. You're done. It's in the pipeline and we're going to deliver it. Get on with it. And if you don't know what you need to sell each week, you're not in control of the future of the business. Every business needs a sales target as step 1. And then you can turn that into how much you need to be quoting every week in order to win and close that business. If you are relentless on the figure of how much you're winning every week, you will dictate the performance and the delivery of the growth of the company and where it will end up being. Get that right first. Then, number 2, most important number. is your gross margin. What margin is actually on that sales value? How much work, when you've quoted it at the quoting stage, what is the gross margin you are putting on it as a business? And this margin does not get fucked around with. You do not mess with the margin. The cost is irrelevant. Whatever the cost is to do the job, once you've quoted a job and then you've added that margin on, that this is the standard the company works to, this is our margin, this is how we operate. This is just a net cost game plus a margin and then a sale value. So you've got to protect the margin all of the time, because there is a difference between what you've got as a margin when you've quoted the job, you've got your costs, you've added your margin on, then it's about securing that margin and then bettering that margin once you've won the job, like negotiating at the front with subcontractors and suppliers, procurement. And then number 3, it's about what did the job actually do at the end? What was the delivered margin? When the job was completed, it's all said and done, what did you actually keep? And this is the difference, because most businesses lose money at all 3 levels. From the quoted stage, there's not enough margin put on, or it's not accurate, the costs are not accurate, to then delivering the project, there's no shopping around, there's no better buying, there's no planning, there's no efficiency to improve the margin. You always want to be improving margin in business, not accepting that the job has lost money at the end. And this is what most people do. They get to the end and they go, oh yeah, we lost a bit of margin on that job. Oh well, let's move on to the next one. And don't change your habits and don't change the way you are doing things. Once you've won a job and a customer says yes, it's then your job to go, right, how do we now take this job from this margin to an increased margin and finding an extra 5% before we even step on site? And then it's about sticking to those standards and delivering it so that when the job is all done, you are maximizing and you are keeping that margin. Delivering a job, once you start day one on site to the very last day, it's just a game of keeping and securing the margin. And this is the driving force of a business, because without gross profit margin, there can't be any net profit margin. There's no bottom line, there's no profit. And most businesses, unfortunately, they lose money at all 3 levels because you're not driven by the gross margin all of the time. So every time you meet with any of your team, any project management, any site management, the topic of conversation's got to be the progress, the ordering, the realities of how the job's actually going, and how is that impacting the finances and the gross profit margin. Because that's why the business exists, to make a margin, so that margin can then pay everyone, build a company, so you can reinvest profits back into it and keep growing. Without it, the company's completely fucked. And the issues that come up is underpricing work at the front, not having accurate costs at the front, and then adding that accurate margin on. It then links into shit site and shit project management. That's what leaks the margin. No organisation, no scope of works, no subcontract orders, no detailed ordering of materials and delivery dates and organisation and specs and design changes, you name it. Just bad management. And it just eats and erodes margin. And if the client changes things and asks for variations and extras, or the scope changes, it's the variations. It's tracking those, getting costs approved, yes or no, then moving forward, because you're always trying to protect and build the margin. This is the game. Because every million of revenue, 5% swing, and every business is doing this typically, and this is from working with hundreds of businesses, there's a 5% swing on average at least. On every million of revenue, 5% is being swung, being lost, which is £50,000. So the bigger the company, the bigger the problem. And over 5-10 years, you're talking millions of profit that's lost because you're not protecting the gross margin all the time. And this is just one of the things that I look at in every company that I partner with and invest into is, right, we've got to secure the margin and we've got to boost the margin. Because most companies, it is that 5% swing. And it just becomes a bigger problem. Like, I'll give you an example. One of the companies I recently partnered into was losing about 6% every year. And a 2 million size company, that's 120 grand a year problem. But that problem, as we scale, if we don't fix it and we build the company to 10 million pounds a year, that will become a 600 grand a year problem. And I'd rather have 600 grand in the bottom line than being lost because of laziness and poor management and poor leadership and poor structure inside the business. You've got to be willing to get your hands dirty because it's the most profitable thing you'll do. And this is what it's about, owning and growing a company, is you live and die by the margin every single week of the year. It's not a one-time thing. It's not a look at the end of the job. It's a constant thing from estimating, tendering, securing, pre-construction, and the actual construction phase and handover back to the client. Then number 3, you need to know this number of a break-even point. Most owners avoid this number because it exposes reality and it exposes and creates pressure. You need to know your monthly overhead cost, and you need to work back to how much gross profit do you need to actually build every month, to cover that overhead cost. So as an example, let's say your business today, you've got an overhead expense of 50 grand a month. That's everything. That's what it costs you that to keep the lights on. All the office team, all the office, any vans, insurances, subscriptions, computers, you name it, whatever it is. Let's say it's 50 grand a month. And if you operate at 25% gross margin, you know that you need to invoice 200 grand a month just to cover the bills, just to stand still. And this is where my mindset that I have is always having a zero-minded mentality. And what I mean by that is knowing what your zero figure is, because it's not zero. Like, it's obvious. If you do zero in a business, you invoice nothing in a month, you're going to be in trouble. But you need to raise the level of what your zero actually is. So based on that example, if you've got overheads of 50 grand a month and you work to a 25% gross margin, you know that to be at zero, you've got to invoice 200 grand a month, because that just covers the bills. You're not making money at that level. Once you're above the 200k a month, now you're starting to actually build profitability and your net profit's going to start to appear. And this is the way I like to always think of just operating at, we're at zero once we've invoiced this much. Because it doesn't take many months of missing this figure and you are fucked. And this is the reality of businesses that I sit with and work with, is find out that people are not switched on to how much you need to actually invoice every single month. You cannot miss a month. You cannot miss a week in sales, and you cannot miss a month in revenue generated and invoiced and completed, because otherwise it's going to end up in a bad year. Like, you have to be super on it with the break-even point and get very clear on that. So you need to go away and work out, right, what are your overheads? What is the set margin that you work to? And what are you consistently delivering to? How much work do you actually need to sell every single month and invoice and deliver just to keep the lights on and stay the same? The next is a net profit. And this is what we're in business for. This is the only thing that matters. Everything else is complete noise. Everyone wants to talk about the revenue. Everyone wants to talk about how well the job is and how well it looks and how good you look on the outside. But look, ultimately a company is only as good as the net profit and the bottom line. And this is the sad reality of working in various different companies. There are so many companies out there that are doing tens of millions in revenue, and their bottom line is just not there. It's not there. Like, it's dog shit. It's not worth owning and running the company. Like, it's a waste of time being in business. The net profit bottom line is the only thing that matters, because I just don't care about revenue if you don't make money. So whilst the show and the content and the things I put out, we start with the top line. We have to start there. Look, you want to be in the top 1% of businesses and get into 5 million plus a year. That's great, but that's actually quite easy to do if there's no profitability. Getting revenue is easy. Securing and keeping and managing the money is the effort and the hard part. And unfortunately, the reality is most companies don't make money. And if you want to master your net profitability, you don't look at the end and see what the job made and how much profit the company has made as a whole from all of the projects and jobs you've got on. You have to track every single project and cost. Profit has to be protected like your life depends on it, because it does. If you don't have profit, it's impossible to have cash flow. If you haven't got cash flow, you go out of business. Not a good place to be in. And net profit doesn't happen. It just doesn't happen by accident. It requires extreme discipline. It requires extreme cost control and fast decisions to avoid costly mistakes. And the reality is, most companies don't make net profit because they bury their head in the sand of confronting, going to a client asking for more money, charging the right prices, not having any fear or insecurity about charging higher margins, not having any fear and worry about challenging subcontractors or your own guys on the quality of work, because if something's done wrong and you've got to go back and do it, it's costing more money, which means the gross margin's being eaten at, which means ultimately the net profit margin is going to suffer as a result of that. Or you make impulsive, silly decisions as a central cost and your overheads get out of control and you're spending money on the wrong things in the wrong order at the wrong time with the wrong priority, which just kills the net profit margin. Like every single expense adds up. You know, just the other day I was going through the P&L of one of my companies and you realise there's certain subscriptions that are only small, £10 a month here, £50 a month here. And I'm talking in a company that's doing multi-millions in revenue. But these decisions still all add up, because before you know it, you've got subscriptions that are costing you a couple of grand a year. You've got dead wood that's costing you £5 a year. You've got mistakes on jobs costing you 50 grand a year. This all adds up. And it's all these little things that all compile and compound into a business that's really successful or a business that's just not making a net profit. And profit has to be protected. And it only exists when you plan for it, you organise for it, and you protect it at the back end. And then number 5 comes down to cash flow. And this is where businesses die. Even if you are highly profitable, if you run out of cash, you can go out of business. And sometimes this happens in a company. You're making profit in reality, but the cash isn't there because there is a real payroll pain. You've got sleepless nights. And I've had this before when I've actually run out of cash because I was unorganized, I was unstructured, I wasn't disciplined in the company, and the payments didn't come in time. The money didn't come in time. I had loads of work on, loads of jobs on, but I ran out of cash. And that scarred me for life. The way that I used to operate back then, which is how I would never operate now, but I used to go to the pub on a Friday with some of the guys and pay some of the guys in person cash. This is a long time ago. Those days are gone. But I remember I had to break the routine and not go to that pub and pay people. I made an excuse of why I couldn't go. And it was actually because I didn't have the money to pay people. And I felt like a sack of shit. I hated that. I never wanted to be in that position ever again. And that was part of the process of me learning about business and learning about structure and payment times, deposit payments, structured payments, you name it, and deliberately building the business so that you've got a money model that money comes in. Because ultimately, this is a cash in, cash out game. It's about the timing gap between when cash comes in and when it comes out. And every 30 days, cash is going out whether you like it or not. That is a fixed thing in a business. Every 30 days, everything's getting paid once a month at least. A lot of you are paying subcontractors every single week. So cash is always going out. It's the money coming in that is the issue. And if you are deliberately signing up to the wrong terms on contracts and on jobs, and if you're not invoicing correctly, you're not invoicing as quick as you could be, you're not doing your applications in a commercial setting, you're not invoicing as much work that could be invoiced, you're not getting favourable terms with your subcontractors and your suppliers, and you're not using credit cards to your advantage to prolong money going out, you're not playing the game, and it all adds up. And you need to really hold money as long as possible. You need to get in this mindset. And this is somewhere that you all go wrong, is that you think you need to pay people instantly. You pay invoices weekly. You pay invoices as soon as they come in. You've got to stretch your terms because no one can afford to do that. You can't bankroll it. You can't bankroll this industry thinking like that. You've got to stretch your terms to as long as possible. You need to collect money earlier. You need to pay money out later. And you need to forecast your cash flow. This is a big thing of what cash flow doesn't just happen. The cash flow you have today in a business is a direct result of the previous week's decisions and how you operate the business. It doesn't just happen when there's low cash flow or tight cash flow. It's happened because of what you have done. So you can't see where you're going if you haven't got a cash flow forecast. So one thing that you need in this business is a clear forecasting document of at least 13 weeks so you can see exactly where you're heading up. So based on the work you've got secured, all of the projects, when you're going to invoice them, when they'll be paid, and all of the money that's going to go out every single month and every single week, when you're going to order things, when you're going to buy things, so that you can clearly see where the forecast is, because you cannot make buying decisions based on the bank balance. That is what is a guaranteed way to get you in a lot of fucking trouble. When you see the bank high and you think, oh yeah, we've got money, we'll go and buy something, or I'll take some more money out as dividends, I'll go and treat myself. But then the next week you've forgotten that you've got 100 grand going out here, you've got 100 grand the week after, and you're in the shit because you're spending money that isn't yours. The cash flow is going to be unpredictable. It's not an accurate measure of what money is actually yours versus what is the company's, what is required to build and run the business, because you've got to pay people out, or it's deposit money. It's not actually your money yet. You've got to remember, profit does not mean shit if you run out of cash. If you don't forecast it, you cannot plan and protect it properly. Cash flow is the king of this business. It is the king. If you run out of cash, you are dead. And again, going back to my zero mentality, you need to have a bank figure, a balance that's in the bank account at all times that is your new zero. You don't want zero to be zero cash, because you are done. You're out. And that's a risky place to be. And I've actually done this with a company. I've saved it from going bankrupt. And the bank was at zero regularly. And sometimes it did dip under. And money had to be borrowed and lent and changed. And it was a nightmare. That's not the zero you should be looking at. Your business bank account, the zero needs to be a percentage of the revenue you want to do. So if you want to build a £5 million a year company, you are going to need at least 500 grand in the bank. That's just what it is, because if a client pays you late, or an emergency happens and you need to bankroll something, or you need to pay someone earlier to get something done, you're going to need the level of money that's going to protect the business forever. You're not playing this short game, you're playing the long game. So if you've got in your head, you always need at least 10% of your revenue. So if you're at $1 million now, you need at least 100 grand on the worst day, the lowest the bank goes to. That 100 grand is a zero. If it's 5 million, it's 500 grand. That's the zero figure that you need in the bank all of the time, because that is what's going to protect you, because something will go wrong. And this is what really impacts cash flow. It's when something goes wrong, or a mistake happens, or a client doesn't pay. Because if you've got one large contract on and from whatever reason, they don't pay you for another 30 days, which does happen all of the time. Even the client who's the most reliable payer, and you think, oh, they never mess around. One day they will mess around. It's always the person you least expect. This has happened to me loads of times in the past. And once you're burnt with it once, you never want to be burnt by it again. If you want to be safe, you need 10% at least of revenue on a worst day in the bank account, so that your cash flow is permanently protected. And the bottom line with numbers, guys, look, this is very simple. This is 5 clean numbers I've given you today. These numbers need to be reviewed weekly as a non-negotiable. It's not a nice to have. It's not a maybe we'll look at that, because this is what most people do. When the cash flow is low, they start looking at cash flow. But you need to be looking at it every week, so you can see the problems coming. When it's amazing, you need to be looking at it. When jobs are running really well, you need to be looking at it, because there will still be places that you can improve on. And you cannot rely on your accountant to help you and tell you. Your accountant is not there to steer the company. Your accountant is there to just file what has been done, tell you how much tax you've got to pay, and file all of your returns. They are not your business growth driver. They're an accountant. Their trade is to file the accounts. So the ignorance on the numbers that matter, these 5 big numbers, is a choice. It's your responsibility 100% to own these numbers. And look, the reality is people run from numbers because they don't want to see what they say. Because it exposes the truth. It exposes where all the problems are. It exposes where the shit is in the company and what needs to be fucking changed. And it's hard work. It takes sacking some people. It takes building some systems. It takes stopping doing things. It takes saying no to certain clients because you can't make the money out of it, or the cash flow gets impacted too much by a certain client. And it takes having to get off your ass and go and market and go and sell better clients and solve the right problems in a company. Because look, ultimately, if you refuse to own the numbers, you're just refusing to be a real business person. It's the first thing any real person in business asks. What's the numbers? What gross margins did you make? How much you sold? How much net are you making? You watch any episode of Dragon's Den or The Apprentice. What are they talking about all the time? The numbers. Don't care about how hard you worked, how much effort you put in. That's irrelevant. And this is a reality. A lot of you are like, yeah, but I've worked so hard and I work on this and I haven't got time for this. No one cares. No one cares. And the business doesn't care. The business doesn't grow without the firm numbers. So show me your numbers and I'll show you exactly where the business is heading. Quick one, guys. If you're doing over £1 million a year in revenue, but you know the business is not quite where it should be for how much work you put in, maybe the margins are slipping, maybe cash is a bit tight, maybe everything depends on you a little bit too much. I guarantee you've got leaks in the business, real profit leaks that need fixing quickly. The first step is to find the leaks, and that's why I built the 100K profit leak audit to show you exactly where you are losing money, what is inefficient, and what needs to be fixed first. No fluff to it, there's no complicated accountant language, it's just total clarity on the business. You'll find the link below this. Go and take the 100K profit leak audit now. That's the best place to start.